Hello, and welcome to another Investing with Bosisco video. In this video, I want to let you look over my shoulder as I try to decide if I should sell Barrick Gold. It has made a nice run up, much better than I anticipated. I find that the price of gold is manipulated by the big boys, and we small investors are at their mercy. We have to take what we get, as we are out of the circle of influence. I like the way that Warren Buffett approaches the business world. Buy the best businesses and hold for the long term. For us small investors, we want more. It is part of our nature. We are outsiders, and we have to be nimble, as 2020 is the year of the swing trader. There is always an opportunity in these markets to buy high-quality businesses and grow our accounts. Like Warren Buffett, I have a large cash war chest. These markets are difficult to understand, so I'm very conservative in my trading. Gold has been a poor performer over the last 5 years, and its time has arrived. So let's see how Barrick Gold did as a hedge for stranger things. Now, if you've been here before, you know that I am just an individual investor like yourself. So take anything I say as pure entertainment. I'm just as confused as you are in trying to make sense of the stock market. The videos on my channel may provide you with guidance on how to do your own stock selection. First, let's look at the overall market this year. To do this, I have a chart of the XIU ETF on the Toronto Stock Exchange. This is the iShares S&P TSX 60 Index ETF. Oh boy, that's a mouthful. Now, this is not quite the V-shaped recovery of the stock market that some expected after the March lows. What concerns me is the market may have topped at the end of May and the first week of June. I'm weary of the market losing its upward momentum. I've added some lines to the chart of XIU. What we see here are Fibonacci lines. Now, I do not use this in my analysis, but it pays to look at indicators that other traders use in their analysis. Now, to keep this simple, I have drawn this from the highs back in February this year to the lows in March. Users of Fibonacci lines look for the stock, or in this case the ETF, to trade near the lines. Now for me this is backward looking and fitting the chart. We do see that in May the index retraced from the lows in March to 23.6%, then up to 38.2%, then retraced up 50% of the move down from the February to March lows. Then it was up to 61.8% retracement from the March lows, and then traded between the two Fibonacci lines. It broke out of the 61.8% line, but has been sideways since the start of June. Now, I do not know what this means, but I think the market is pausing here without direction. Could it be that our breakdown in the 61.8% line could trigger a sell-off in the market? Maybe. Now, I want to look at my other charting software to see what indicators are showing up in this ETF. Now, we see 4 recent sell flags, and it makes me wonder if the smart money is slowly selling into the market strength against the individual retail investor. This is making me cautious for a 5th red triangle, which could signal that it is time to get out of the market and sell some of the stock we have in our accounts. It's better to be safe than sorry. You can always buy back the stock you sell. Now, I want to drill down the ETF that is made up of the major gold stocks. This chart is the iShares S&P TSX Global Gold Index ETF. Oh boy, another mouthful. You can see here that there is a difference from the TSX 60 Index ETF that was trending in a range, and this one that is trending up. What worries me are the last 2 trading days of this chart. There are 2 circles on these dates. Now the color and numbers do not mean anything. They just alternate as the charting software produces these indicators. What is important to me is that the gold stocks may reverse course and trend down. Those 2 circles give me pause about trend reversal, so I jump to my other charting software and see what the 2 red flags have appeared in the uptrend. Both of the flags failed to show that the trend has peaked in the XGD ETF. It is a strong trend, but I feel that it has overextended to the upside. So now let's look at the charts for Barrick Gold on the Toronto Stock Exchange. First, this is a recap of the previous video where I looked at Barrick Gold. Everything looked good, and the stock was still moving up. This recent chart shows no indication that the trend has ended, but I'm cautious as I feel the party is almost over and it's time to get out and take a profit in Barrick. Moving on to my other charting software, I see that there is 1 sell flag at the end of June. While the gold stock ETF had 3 sell flags, we have only 1 here. These flags, when they appear, always make me take notice. The second one on this chart for Barrick would make me sell at the open the following day. Now, one thing I can do is see if the trend can be projected into the future. Now, do not ask me how this is done, as the formula for doing what I think is regression analysis is beyond my mental capabilities. It is a statistical calculation that varies with the input. So if it is garbage in, then it's garbage out. Now, what I'm doing here is looking at the trend from the lows in March to the highs in May to project out to the future. Now, the projection here is a peak price of $39.15 in 7 trading days. It is an estimate, so we will see if this will occur in the next week. Now, personally, I would not place any bets on it. Just that we could be close to a turning point in the next week. So we will see. Anything can happen in an unpredictable stock market. So let's go on to do a summary here. Now, chart 1, the RSI has trended up in a buy area, but is now moving down. MACD is still moving up and has not signaled a reversal in the trend. Now, chart 2, we got 1 sell flag, but the sellers are not in control. Anytime now, a second sell flag could pop up, and that will seal the end of the trade for me. Now, that's using the MACD Bollinger signal that I talked about in a previous video. So, to summarize, we've got a projection of the future price in 7 days based on the trend of $39.15. Now, the current closing price on Thursday was $37.50, so we have a potential upside of 4.4%. Now, I purchased the stock on June the 4th at $31.53. Now, the closing price yesterday on July the 9th was $37.50, which is up 18.9% from when I bought. Now, this is double my yearly goal of 9%, so I'm very satisfied with this trade. Well, I'm more than satisfied. It's done remarkable. I did not expect this. So the action right now is I've got my trigger ready to sell. My trigger finger ready to sell, I should say. And as I say, if I get another red triangle or red flag, I will sell at the open of the next trading day. So I wish the stock would have gone up about 300% from my last video, but that is because I got 7 more subscribers plus 2. No, I got 7, 8. I got 9 more subscribers from my last video. So I want to welcome all 9 of you to the channel. That's a 300% growth from the 3 subscribers I had on the last video. So again, I want to thank you for watching, and we'll be seeing you in the next video.